very warm welcome to the 166th AGM of Ipswich Building Society, and especially warm welcome to those of you who we're seeing for the first time this evening. I hope that you find this of interest. So let me start with the AGM proper. First of all, we have the minutes. The minutes of the AGM held on the 25th of March 2015 have been read and signed by the chairman of that meeting. It's normal for these to be taken as read, but if anyone would like them to be read out, please indicate that now. Thank you. For this evening's meeting, we have received apologies from 8 members. I don't propose to read their names out, but the list can be inspected after the meeting. Let me move on to talk about the performance of the Society for the year ended 30th of November 2015. Ipswich remains a very traditional building society. We take in deposits from members and we lend out that money to people who want a mortgage to buy their own home. Ipswich Building Society has been doing that same thing since 1849. Of course, it's a lot more complicated than that, and recent years have seen a huge amount of regulation heaped upon us, aimed at making the society financially fitter and able to withstand shocks or downturns in the market. But the fundamentals of the underlying business remain. We have to keep an approximate balance between the amount that we take in on deposit and the amount that we lend out. If we had too much on deposit, it would be very costly and we would make a loss. And of course, we can't lend out more than we have on deposit. So there's a constant juggling that goes on to keep the deposits and loans in a sensible balance relative to one another. This year was quite a challenging year for our mortgage lending, not because the market was difficult, but because some of the ongoing issues with our new IT system slowed down our ability to handle new mortgage applications. We had hoped to introduce a portal which would enable our brokers to submit applications quickly online. However, there were endless problems from the developer getting it to work correctly, and this hampered our ability to write new mortgage business. Indeed, for a period of time, we withdrew all mortgage products from the market to allow our underwriting team to catch up with the backlog caused by the rather slow manual processes. During the year, of course, lots of mortgages matured, or borrowers chose to move their mortgage elsewhere at the end of a fixed price term. These redemptions, together with a low level of new mortgages written, meant that our overall mortgage book reduced by £21 million to 453 million at the year end. However, this is not a cause for concern. The quality of the lending that we did in 2015 was good, with 70% being to people buying a home in East Anglia. 93% would be classed as prime residential lending. In summary, we're able to lend money to good quality borrowers, many of whom are in our local area, an area that we know well and where we have a good understanding of the housing market. These are important factors in reducing our risk of a borrower defaulting on their mortgage payments. Our record of arrears and defaults remains good, and this year the number of arrears of greater than 12 months has fallen to only 11 cases, compared with 16 last year. This year, to keep within regulatory limits, we've only carried out a very small amount of buy-to-let lending. Our policy here continues to be to lend only to private individuals with a small number of buy-to-let properties. We don't lend to big commercial operations. This focus has also been important in reducing our risk. Paul will explain in his speech the work we've been doing with borrowers to help them under the new regulations on mortgage lending, when many found themselves unable to borrow from some of the large high street lenders. We will continue to look for innovative ways to enable people to buy their own home. In the meantime, we have put renewed energy and focus into our relationship with mortgage brokers across our region. Something over 80% of the lending that we do is introduced to us by a broker, with therefore only a very small amount coming to us direct in a branch or at head office. Our relationship with brokers, therefore, is critical. They need to know what to expect from us, the type of lending that we're prepared to do, and that we will respond in a timely and efficient way. We've worked hard to create a new broker proposition for them, and the response has been very positive, such that we began this financial year just before Christmas with a strong pipeline of applications, which will flow through into our results this year. In the meantime, the unfortunate consequence of a reduced level of mortgage lending this year was that we were finding ourselves with too much money on deposit compared to the amount that we've been able to lend. The interest rates offered on many of our older accounts, though low, were attractive compared with the market and thus continued to attract new money. To help to rebalance our books and ensure the financial strength of the society, we reluctantly took the decision for the second consecutive year that we had no option but to take steps to reduce the inflow of retail funds by reducing the interest rates on some of them. At the year end, retail savings balances had reduced by £15 million to £524 million. Balancing the interest payable on deposits and the interest receivable on loans helped us to achieve a profit before tax for the year of £1.9 million. This was rather lower than last year's profit, but still helps to contribute to our capital position. Our capital has increased consistently over the last few years, so much so that in January this year, just after the year end, we were able to repay £3.5 million of subordinated debt. Subordinated debt is a particular type of money that is loaned to us for a fixed period of time and on which we pay quite high levels of interest. Being able to repay surplus sub-debt therefore reduces significantly the amount of interest that we pay. In this case, it'll save us about £800,000 a year. We will continue to grow the business slowly and in a sustainable way, which enables us to build capital and to manage our risks. Regulation of the financial services industry continues at an inexorable rate. Every year brings more and more red tape that we must meet. We're keen to embrace regulation that makes the industry safer for investors and our customers. However, we also see regulation, most recently rules that came in from Europe only this week, which add complexity and cost to our business without offering any benefits to you. That's not a comment on my views on Brexit, by the way, for the avoidance of doubt. New regulations, which came into force just this week, meet these criteria. It is perhaps easy for regulators to set new rules, but I wonder sometimes whether they consider the knock-on impact of businesses or the hidden costs. Every new rule requires very considerable IT changes, as well as new procedures and training for our staff, all of which come at a cost. The other area in which the regulator has had an impact in recent years is in relation to the quality of non-executive directors on the board. 20 years ago, directors of a regional building society would commonly be business figures from the local community. Good business people, but often with fairly limited knowledge of the regulated financial services industry. With encouragement, and sometimes pressure from the regulators, boards of directors today offer a complex and sophisticated mix of skills and experience, embracing finance and accounting, risk, marketing, digital strategy, prudential management, liquidity management, and financial services. At the Society, we have been very lucky in being able to attract and keep high-calibre non-executive directors. This year, we've been delighted to welcome Valerie Dias and Peter Elcock to the board, both outstanding individuals with, between them, extensive experience in finance, risk, prudential, and retail financial services. Already, we are benefiting from their experience. As both Peter and Valerie have joined the board during the year, our rules require that they offer themselves for election by you, the members, at this, their first AGM. The process of refreshing the board continues, and this year we're likely to lose Derek Bowden, who unfortunately can't be here this evening, as he has now reached 9 years on the board. Corporate governance guidelines recommend that directors should not serve more than 9 years without a very good reason. I'm delighted that Derek will remain on the board until we are ready to appoint a suitable replacement. Ladies and gentlemen, though the Society has not grown this year, it has finished the year in a strong position. Good relationships with mortgage brokers, a strong mortgage pipeline, stronger internal processes and functions supported by a new state-of-the-art IT system, which is now functioning well. New senior hires within the business, leading a new organisation structure, all with an eye to the future. I commend the annual report and accounts to you. Before asking you to vote on our resolutions, I would like to open the floor up to any questions that you might have. There was one passed to me earlier, so I will read it out to fill a small gap. A member has submitted a question in writing to us this evening, which says that in your annual report, you state that you deliberately commenced the year with a low level of mortgage applications to assist the IT integration, and also you needed to limit input by reducing the rates on some types of savings accounts, and this resulted in £15 million of savings being withdrawn. And the question is, can I ask if this amount of withdrawals was expected, and did it concern the board? And would there be any incentives in the pipeline to attract that money back into the society? I hope that my comments earlier about needing to balance the amount on deposit and the amount that we lend makes sense. So was the amount unexpected? Did it alarm us? No, it didn't. We were expecting a modest level of withdrawals when we reduced our interest rates. And as and when we can, when the society can afford to, we will be increasing interest rates again to benefit youth and members. So no immediate incentives, but we are always looking at the interest rates that we are able to pay on our deposits, and we make those as cost effective as we can for you, but also looking after the interests of the society. Ladies and gentlemen, are there any other questions? Thank you. In that case, I am going to look at the individual resolutions. So, these should have been in the notice of the AGM that came to you. Item 1 is to receive the report of the directors, the annual accounts, and the auditor's report. I propose that the director's report, annual accounts, and the auditor's report are received. This is a resolution that doesn't require a seconder. Item 2 is to approve the director's remuneration report. The remuneration report is included in the annual report and was included in the review of the year, which was sent to you with the notice of the AGM. The report sets out our approach to remuneration of our executive and our non-executive directors. There have been no substantive changes to our approach this year. Non-executive directors receive a basic fee with a supplementary payment for roles such as chairman of the Risk Committee and the Audit and Compliance Committee. Executive directors receive a basic salary, which is reviewed on an annual basis and can also benefit from a performance-related pay scheme if set targets are achieved. While we're not strictly required to seek your approval for our directors' remuneration report, we think that it's in the interests of good governance and transparency that members do have a say. I propose that the directors' remuneration report is approved. Please could I have a seconder? Thank you. Item 3 is to reappoint KPMG LLP as our auditor. An annual requirement for this meeting is for you to consider, and if thought fit, to pass an ordinary resolution to appoint KPMG as our auditors. I propose that the Society reappoints KPMG LLP as auditor. Please could I have a seconder?
I'll second that.
Thank you very much. Item 4 is to elect or re-elect the Society's directors. Our rules require that not less than 1/3 of our directors should retire each year, and if they have the support of the board, can offer themselves for re-election. I've already also said that Valerie and Peter are putting themselves forward for election for the first time. I propose that Valerie Diaz, Peter Elcock be elected, and that Kieran Blackburn and myself, Sarah Evans, and Michelle Tennans are re-elected. Please could I have a seconder? Thank you very much. Ladies and gentlemen, if you haven't already voted, please can I ask you to cast your votes now on the papers provided and pass them to a member of staff, and they will be collected up together with any votes. They will then be counted together with any votes that were placed when you arrived this evening, and also added to the voting that's already been done in branch or online in advance of this meeting. While the votes are counted, I want to announce the winner of our annual David Coe Award, and then I'm going to hand on to Paul Winter, who will tell you about some of the other activities of the Society during the year. David Coe Award is all about outstanding service, outstanding customer service. Outstanding customer service that exceeds the normal requirements of the job is what defines the winner each year. It's based on nominations from Society employees and can be awarded to head office or branch staff. The decision this year has been particularly tough, but after much consideration, we have our winner. This individual consistently shows that they have members' best interests at heart and goes the extra mile to deliver exceptional customer service. Having only been with the Society since 2014, they have built up a brilliant rapport and relationships with customers and have a remarkable affinity with them and always look to provide the best solution to any issues that you might have. Our member wrote to thank this individual for the sensitive and kind way their situation was handled, commenting that they were absolutely first class and a credit to your organisation. In addition, this year's winner volunteers with the Suffolk Befriending Scheme, takes part in delivering financial education to local children, and helps with other member events. They've also undertaken a sign language course to enable them to communicate with any member or customer who are hard of hearing. I and the Board of Directors would like to thank this individual for their dedication and commitment to providing excellent member service. Ladies and gentlemen, the winner of this year's David Coe Award is Charlotte Gray-Farrer from our Sudbury branch. Please would you join us in congratulating her.
Good evening, ladies and gentlemen. It's again very pleasing to see so many of our members here this evening. Ipswich is the envy of many building societies with the support we get from our members at our annual meeting. 2015 was an interesting year for the Society when we made significant changes to our management structure, both at head office and branches, whilst at the same time continuing with the programme of IT change. I will pick up in more detail those two items shortly. What didn't change, though, in the year was our commitment to ensuring our members are able to see the benefits of being part of a strong local mutual, and that we see Ipswich Building Society as being a very important part of the community at large. I will talk more about why we are involved in the way we are later on. The Chairman has already taken you through the results for 2015. It was particularly pleasing in the second half of the year to once again show the Society's strength in the mortgage market. Our mortgage book grew by 2% in the period June to November 2015. This momentum has been carried forward into 2016. The impact of the technology change in 2014 and early 2015 meant that we had to work hard to re-establish our place in the mortgage market. It seems clear to me that our approach to mortgage lending is very much valued by mortgage intermediaries and also by those who approach us directly. Our mission is to enable people to have a home of their own, so we look at the best ways of achieving this aim, and that means treating applicants as individuals with specific needs. Our Mortgage Misfits campaign was acknowledged on a national level as being one that was innovative and necessary. Our approach to helping the so-called mortgage prisoners was unique and did demonstrate that taking a positive approach to new regulation can be successful. Increasingly, people's lives don't fit into neat boxes which can be assessed by computer programs. We have a highly experienced underwriting team who can judge the crucial ability of a potential borrower to pay their mortgage. The underwriting team have collectively 107 years' experience in assessing mortgage applications. None of them are that old, of course. We must be getting it right, though, as our mortgage arrears figures are below national averages and are continuing to fall. In 2016, we are planning to further expand our lending and get back to the levels we achieved in 2012 and 2013. At the current time, we're seeing some uncertainties in the housing and mortgage market, but I think they will be short-lived, and certainly the East Anglian and particularly the Suffolk economy is very strong. In recent years, the Society has pointed out the issue of the inadequate supply of new housing. By whatever estimate you use, as a nation we are failing to build enough houses to meet demand. The government have announced a number of measures to try and increase supply, and we will help wherever we can. I recognise that careful planning of where new homes are built, though, is absolutely vital. As the Chairman has mentioned, Monday of this week saw the introduction of new regulations on mortgage lending emanating from Europe. The Mortgage Credit Directive makes very significant changes to the information given to mortgage applicants. Coming so soon after the mortgage market review, the new changes were unwelcome and have been disruptive to our mortgage lending. I'm not sure what happened to the government pledge to scrap one existing law if a new one is introduced. We will successfully, and we have successfully, implemented the changes, but we hope that there are no new regulatory changes, particularly in the mortgage market, for a few years. I mentioned earlier the importance of the experience of our mortgage underwriting team, and in 2015 we've added further experience to that team to help ensure that we can be the go-to lender for local and national mortgage intermediaries. We also brought in a number of new faces to the senior management team, many of whom are here tonight. We did this to ensure that the Society does have the level of skills and experience needed in the future. As well as adding to our senior team, the Society has continued to support the employment of apprentices. And we're happy to be part of the Suffolk campaign to appoint 500 new apprentices in 100 days, a campaign that was successfully achieved. Apprenticeships at all levels are a key part of the employment scene. During 2015, we had 6 apprentices in different places across the business, and our commitment to apprenticeships will continue for the foreseeable future. Changes were also made to our branch management structure to ensure that those of our members who visit branches had easy access to a manager who is empowered to make decisions. I know from the feedback we get that despite all of the changes in the way people do business, our members still greatly value the very individual, friendly and efficient service they get from our branches. We want members to enjoy a branch visit. Unlike so many financial organisations, we don't view our members as sales targets. It's important, though, that in recruiting fresh faces, we don't overlook the development of our existing staff. Our performance appraisal scheme, which we updated in 2015, allows all staff to highlight what development needs they have in their current role, but just as importantly, flag up their career ambitions. Senior management are then able to review the information and design development programmes accordingly. One group of staff are currently working towards achieving their BTEC Level 3. This initiative has been part funded by the Employer Ownership of Skills Fund, which is being piloted in Suffolk. It is important that government, both central and local, support the development of the workforce, but ultimately it is for employers to recognise the very real value they can get from adding to the skills and experience of their people. I talked earlier about our community activities, but it is of course essential that the products and services we offer are both competitive and effective. I'll talk about interest rates in a short while, but for a moment I would like to touch on some of the other key activities we undertake, which you might put under the heading of community activities or corporate social responsibility. I'm sure everyone here would agree with me that one of the reasons for the financial crisis in 2007-8 was the generally low level of financial knowledge across the country, which led to many getting into difficulties. We feel that the Society has a role to play in helping to prevent a reoccurrence by improving financial education. In the last year, we've added to our long-standing Money Day programme in primary schools with a dedicated programme in high schools under our Money Metrics brand. This has proved highly popular. At the same time, we were approached by local prisons to provide a similar programme to those prisoners who are being prepared for release. We now visit on a monthly basis. Reducing reoffending is in everyone's best interest, and financial knowledge is a critical part of helping ex-offenders get back into mainstream life. Some members may ask why we do these sorts of things. Well, as well as being the right thing to do, it has to be in our interest to help build a successful local economy. But there are other advantages. Research shows that those organisations who engage their staff in these activities are the most successful. Other research shows that many younger people are making their purchasing decisions increasingly around in the way in which a business behaves, not just on the products and services it offers. By being involved in the community, we think everyone wins. Mortgage lending is key to the Society's future, but we recognise that we can only lend if we have the funds provided by our savings members. But as a building society, we only need to attract sufficient funds to meet our lending aspirations. As Sarah has already said, we did need to reduce inflows again this year. However, unlike many financial institutions, we have ensured that existing members get the same or better rates than new ones. The sustained period of very low interest rates has hit savers the hardest, although it has been partially offset by the low rate of inflation we have also experienced. With the Chancellor forecasting inflation at 0.7% for 2016, it seems unlikely that rates will increase anytime soon. Savers' incomes will also be boosted by the introduction of the personal savings allowance from the 5th of April this year. For basic rate taxpayers, you can now receive £1,000 each year in interest and pay no tax. This is, of course, on top of the ISA allowance, which we were pleased to see increase to £20,000 from April 2017 in the recent budget. As well as endeavouring to offer competitive rates, the Society seeks to demonstrate the value of membership in different ways, whether that is access to senior management if you have a problem or query, or the knowledge that none of our products will have hidden surprises or catches. For many of our members, it is our branch network which forms a key part of their relationship with us. Local branches staffed by knowledgeable teams who are committed to providing the best possible service are a key part of our strategy. Our unique offering is the programme we run under the Member All-In brand, which includes a series of member events which have ranged from a visit to the Sandringham Flower Show to a trip to the top of Orford Ness Lighthouse. In all, over 1,000 members took part in events in 2015. This included 279 at last year's AGM. Your attendance means that once again we expect to have the second highest turnout at an AGM across the United Kingdom, exceeded only by the Nationwide. We do want our members to feel that they belong to a different sort of organisation, one where they have a voice which is heard and acted upon. I would particularly like to thank Sonia Jackson for the work that she puts in on member events. Turning briefly to the future, I have already mentioned that we are looking in 2016 to significantly increase our mortgage lending. We will not do this by taking on increasingly risky business, but by focusing on the wants and needs of applicants and of the intermediaries who introduce them to us. I spend a lot of time talking to intermediaries, and their feedback makes me confident we can continue with our success. We also have a great team of mortgage consultants who deal with those applications and applicants who come to us direct, and the volume of business we receive in this way is increasing. I've previously mentioned the challenges we have faced in recent years around the movement of our core IT services to a new provider. I'm pleased to say that substantially that work is now complete, and we can look forward to developing new services, whether they are online or mobile, to ensure that our current and potential members can do business with us in the way they choose. We have significantly increased our people resources in this area to provide us with the expertise we need. New technology doesn't come cheap, but we will find ways of being able to fund new innovations. Thank you once again for your support tonight and throughout the year. And I'll now hand back to the Chairman, who will announce the results of the voting.
Ladies and gentlemen, thank you for your votes. I have the results of the voting. This is the complete voting from tonight online in branch and so on. So the first resolution is to receive the report of the directors, the annual report, annual accounts and auditors report. Votes for is 2,935. Votes against 32. To approve the directors' directors' remuneration report, votes for is 2,720 and votes against is 227. To reappoint KPMG LLP as auditors, votes for 2,866, votes against 85. In relation to the election of directors, votes for to elect Valerie Dias, votes for 2,833, votes against 120. To elect Peter Elcock, the votes for 2,835, votes against 111. To elect Kieran Blackburn, to re-elect Kieran Blackburn, votes for 2,853, votes against 105. To re-elect Sarah Evans, votes for 2,844, votes against 115. And finally, to re-elect Michelle Tennons, votes for 2,831 and votes against 129. So, ladies and gentlemen, on the basis of that, I declare that KPMG LLP duly reappointed as the Society's auditor. And I declare Mrs Dias and Mr Elcock duly elected as directors, and myself, Ms Evans, Mrs Tennons and Mr Blackburn duly re-elected. All of these results and the detail will be available on our website from tomorrow. Ladies and gentlemen, thank you very much for your attention during the formal part of this meeting. I'm now going to formally close the AGM.